Let's now go live to Saudi Arabia, to Riyadh, where Erin Burnett has the rest of Street Signs this Wednesday afternoon. Erin.
All right, well, Simon, thank you very much, and good evening from Riyadh. It is the world's oil capital, and I want to apologize, everyone, for the difficulties we had at the top of the show. We weren't there because a rogue sandstorm literally has blown through here. I have a coat on. They say it's the coldest day ever in Saudi Arabia. We just wanted you to know why we had a little bit of an issue, literally a sandstorm. But all eyes here in the Middle East's most powerful economy are on Cairo, where we came from this morning. The latest from Cairo today, protests turned violent. Mubarak supporters clashing with protesters this morning. The White House warning Egypt's government that if it's instigating any of the violence erupting on the streets of Cairo, it must halt immediately. The big question for investors around the world is whether it could happen here, where I'm standing. Since the crisis in Egypt began, investors have been buying protection against the Saudi default. Over the past 30 days, if you look at Saudi CDS, they're up 53% compared to Egypt's, which are up only 42%. Now keep in mind, Egypt's were much higher to begin with. Risk still low here in Saudi, and stability in this country is crucial to every American, to how much you pay for gas and the stability of our country. And our coverage of the crisis in the Middle East today continues from the region's money capital. That, of course, is Riyadh, where I'm standing tonight. And I'm joined now by Bruce Fenton. He is Managing Director and CEO of Atlantic Financial. Bruce, we really appreciate your being with us tonight.
Welcome to Riyadh.
Yes, and thanks for the sandstorm. Better than the storms that we were seeing in Cairo, and I wanted to begin there because that is what we're seeing in the market. We'll put that screen back up on the CDS, but you obviously saw a real surge. Risk still very low,
sure,
but investors around the world have become more concerned because this is, in many ways, the most important economy in this region. What do you think on the ground?
There's no signs on the ground of anything like the Egypt situation. It is a very different place. Saudi Arabia is isolated in a lot of ways. And also, it's a very different type of demographic. It's different income levels. It's a much wealthier country. The king has been in power a much shorter time, and he's really very loved here by a lot of the people, and he's known as being a great reformer. He's done a lot of amazing things for the people and for the country and the economy.
And let me just run this by you. We have this up on the screen for our viewers around the world. Hayes Advisors sent an interesting investor note around. I just wanted to read it to you. He wrote with the headline of it was King Abdullah, knock down your wall. What is the news this morning? The King of Jordan dismisses his cabinet and promises reform. The Yemeni leader won't run again. Mubarak won't run for re-election. In his rigged election that promises a re-election, you can bet on it, King Abdullah is nervous. It sounds like you from here are saying these comments from investors around the world don't reflect what you're seeing, but is there something to that?
Not what I'm seeing. It's important to remember that the king has been a reformer for the time that he has been the leader of the country. There's a lot of things that are very, very positive for the people. The largest women's college in the world, the largest co-ed university, engineering university. There's 4 new cities being built, a lot of job creation actions, those kind of things that are very positive for the people. So it really is a different kind of feel. I think it's very different for the people here than it is in some of these other places.
So as an investor, what are you doing right now?
I think this region, short term, the markets are of course volatile, but long term, this country is the leader in a very, very important region. So long term, I think I'm very bullish on this country and this region.
And what about the reliance? We're going to have a guest later in the program who accounts for 10% of the volume in the Saudi Stock Exchange. When you look at that exchange, it's about banks and it's about oil companies, and I guess that won't surprise a lot of people watching. But isn't that risky?
Well, there's a lot of cement companies, some agriculture, but yeah, it is dominated, and part of it is because of the way things work here. There's a long history of a different type of private equity, which is driven by family businesses. When we think of family businesses in the U.S., we think of 5 or 10 people. Here, family businesses are often multi-billion-dollar enterprises with thousands of employees. It's just the way that the long history of trading families have been here. So it is a different kind of thing, and that's one reason that you see kind of it's not reflected in what's publicly traded. It's not a total reflection of the whole economy.
And what would you say the press coverage has been like here? We had a couple Saudi newspapers, obviously, wall-to-wall coverage of what was happening in Cairo and in Amman. Both of them were on the front page. So for those out there who think that here you wouldn't see that, you did. But how would you describe the coverage? Completely open, completely free, or no?
Yeah, from what I could see, it's very similar. I read the U.S. and the English and the local-based publications, and it seemed to be pretty much the same. I like a lot of the local publications. They go into a lot of depth and just as kind of a different angle. So.
And they say let the people have their way?
Well, you know, I haven't seen too many opinions, and it's split just like it is everywhere else in the world. Yeah, I mean, I think the coverage has been pretty open. I don't see any censorship at all.
Okay. All right. Well, Bruce, thanks very much. We appreciate you taking the time and giving us your perspective on what you're seeing here.
Thank you.